The theme of markets. Our next guest right now is fully invested. Certainly there is some uncertainty, but he was relatively optimistic heading into this new year. And certainly we've seen stocks on a tear before this recent pause. Adam Johnson's the founder and author of the Bullseye Brief. AJ, it's always nice to have you with us. Why don't we start with this last couple of days? So a very strong jobs report seemed to put some of the recent momentum on the sideline. How have you felt about the market reaction to this, I suppose, complicated picture for the central bank?
Yeah, sure, John. It's understandable that the market would come off after a report like that. Honestly, John, as long as I've been managing money, I've never seen a jobs report that was that strong. I mean, to actually create more than 500,000 jobs in 1 month, and I know there's some seasonality and massaging the numbers as economists do, but it's incredibly powerful. The fact that the unemployment rate is at 3.4%, the lowest in whatever that is, 53, 54 years. So it's understandable that investors, that traders would say, hang on a minute, that means the Fed might have to still keep pressure on the markets by raising rates. And if they're raising rates, that's a negative for stocks. Fine, I get that. But when the narrative is as strong as it is, full employment, when earnings are as, let's say, better than feared, as they appear to be right now. In other words, they're not as bad as we thought. And when you have inflation coming down, I'm okay being 100% invested. I think that's the correct long-term decision. So any of these sort of gyrations day to day or even week to week, they're understandable. That's the way markets work. But I think the momentum is forward and thankfully up after a very difficult year last year.
I think the NASDAQ's a helpful example to look at because it had this really strong surge to begin the year. In this country, as you know, tech stocks have also been back in vogue. They've started to pull back. They were down yesterday because of this new question. But to your point, there were uncertainties coming into the year, and yet investors moved back into growth. There were uncertainties heading into earnings season, but we've navigated through that as well. So when you look at this NASDAQ pop that we've seen, Isabel, who was just with us, pointing to some Citigroup analysts who are seeing increased bearish bets being placed against tech. Does that raise any concerns for you?
No. In a word, no, it doesn't. And I know, John, that and you and I have been talking together, you know, every few weeks, long enough, a few years, that you've probably come to think of me as the optimist. Some would probably call me a permabull. But you know what, John? If you look at markets over the long term, stocks tend to rise 2 days out of every 3 days. So it's hard to be bearish for too long. And I really do think the backdrop is very positive. I understand that there are a number of strategists right now who suddenly have started to fancy themselves as hedge fund traders. They want to try to capture every 10 or 15% move. In other words, they say, oh, markets are up, it's a bear trap, time to short it. But when you think about it, John, if you're really trying to be that cute with markets, you have to be right twice. You have to be right up here when you sell, and you have to be right down here when you buy back in. That's awfully hard to do. I operate under the assumption or the motto, time in the market, not timing the market. And so while I took some hits in the portfolio last year, I've certainly made a lot of that back. I look at some of the, the tech names, whether it's, look at Meta, which got down to $88 and now it's $150. Look at NVIDIA, Google, Amazon, the obvious names, Salesforce.com, Palo Alto Software. John, all of these names have been knocked down anywhere from 30 to 50%. And they're coming back. Now, when you get knocked down, that means, if you're down 50, you need to be up 100 to get back where you were. Yeah. But I think we're in a long process of finding our way back.
Well, and I think the other problem in moving out of the market, Isabel was just talking about all the AI excitement right now. A company like NVIDIA is at the front of that change, and so investors came back to that stock in a big way. Who knew that would happen? Who knows what's going to happen any day in the markets, of course. Now, along with those technology stocks, you've come to the table this morning with a few names that we haven't talked about before. I believe these are new positions. So give us a sense on what is driving your interest in a company like MP Materials.
Oh, wonderful story. Ticker MP. Mountain Pass is where that MP comes from. MP Materials is the only mine operating in the United States, going after rare earths, all the stuff that you need in batteries and, more importantly, electromagnets. Stock is trading, if you look at 2024 earnings, because now we need to start moving forward, it's trading in a mid-teens multiple. What this company is able to do for us, John, is guarantee U.S. supply domestically. We don't need to go to China to get those rare earths. That's very important. And the other thing that they're doing is they're actually building an electromagnet facility. So not only do they pull the stuff out of the ground, they then turn it into electromagnets. Electromagnets help electric vehicle motors be more efficient. Traditional electric vehicle motors, you put an electric volt across copper that's spinning, and you create current. But if you're able to use magnets around that copper, magnets are always on. They pull the copper around of their own accord. That makes motors more efficient, makes batteries last longer. That's the story on MP Materials. I think it's just a great American ingenuity, North American ingenuity story that is not only growing, but it's cheap, and it also does something that nobody else can do right now.
And we only have time to go through one more of your names today, but because we were just referencing the AI excitement that's building, and I know there's some stocks out there like C3 or SoundHound that literally have AI in the name, and their stocks have popped in a big way. Symbotic, which is S-Y-M. Tell us a little bit about its connection to AI.
Well, some of our viewers might be familiar with a company out of the UK called Ocado, which started off as a grocery store, and then their warehouse management system turned them into what they are today. Symbotics is doing the same thing. It basically automates warehouses. It turns a warehouse into a place operated solely by robots. And they're in partnership with Walmart. And as a matter of fact, they're converting all 47 of Walmart's logistics facilities into these robotic facilities. They're not cheap to build. They cost about $50 million. But the good news is they basically save a company $10 million in operating expenses over the course of a year. So they pay for themselves within 5 years, and they have a 25-year life. The stock has an $11 billion backlog, which is more than they could build over the next several years. So you have tremendous earnings visibility. If you go out to 20 or 24 earnings, John, it's trading at a mid-teens multiple. It's cheap. It's doing something incredibly exciting, and it's right in the middle of all this stuff that we talk about, from robotics to automation to artificial intelligence.
AJ